Joe is contemplating retirement and decided to simplify his financial situation by disposing of some assets. He had the following transactions during the year. First, he sold his business to his son for $100,000. The fair market value of the business at the time of the sale was $175,000. Second, he paid college tuition of $16,000 directly to the college for his brother's child. Third, he gave stock valued at $15,000 to his alma mater. And fourth, he paid $20,000 of the medical expense directly to the doctor of his sister who had no insurance. What is the total amount of gifts before adjusting for the annual exclusion that should be reported on his gift tax return for the year? So this question specifically deals with gift tax issues, gift tax return, and it's asking what's the total amount of gifts before the adjustment for annual exclusion. We're not dealing with income tax issues here, we're dealing with gift tax issues. So this question specifically deals with the first step when determining the amount of gift tax due, which is determine the gross amount of completed gifts. To be a completed gift, there must be competency by the donor, intention by the donor, delivery to the donee, and acceptance by the donee. None of those four elements are contested here. It looks like all four of those elements are met, meaning that it looks like it's a completed gift. Now, under the tax law, just because something is a completed gift under local law, those are the four elements, it might still not be considered a gift for gift tax purposes. So examples include a gift to a political organization or a gift to a medical educational organization on someone's behalf. Now, for the medical educational rule, it has to be paid directly to the medical educational organization. It can't be paid to the person and then they turn around and use the money to pay it for their tuition or their medical bills. It has to be paid directly to the medical or educational organization. So let's go through these four items and determine if any of these are considered gifts to be reported on the gift tax return. So the first item, sold his business to his son for $100,000. Fair market value at the time of the sale was $175,000. So two things to note here. First, is he selling to his son? In tax, we have special relationships where we always have to strictly scrutinize certain relationships. Anytime you have family members, you have to worry about gifts. If you have employer-employee, you have to worry about compensation. If you have a business and an owner, you have to worry about distributions. Well, here we have family members, right? He sold it to his son. And the second element is he's selling it for less than the fair market value. The difference between the $175,000 fair market value and what is being paid, $100,000, is considered a $75,000 gift. So the first element or first item is considered a gift of $75,000. Second, paid college tuition of $16,000 directly to the college for his brother's child. As mentioned, even if it's a completed gift under the law, for tax law purposes, it's not a completed gift because it's paid directly to the education organization for his brother's child. So this is not a gift. Third, gave stock valued at $15,000 to his alma mater. This is a gift. This is not get out of the gift reporting. It is a gross gift. Now you are going to be able to get a deduction. So he will be able to get a deduction for this $15,000. So you include the $15,000 as a gross gift, and you also get a deduction later on in the gift tax return for the charitable contribution made. But the question is still asking for the amount of gifts before the annual exclusion. Finally, paid $20,000 of medical expenses directly to the doctor of his sister who had no insurance. So this is just like the tuition. He's paying it on someone's behalf. It's medical related and paying it directly to the medical provider. So this $20,000 is not a gift. Therefore, we figured out that the $75,000 in the first transaction and the $15,000 in the third transaction, we add those numbers together. $75,000 plus $15,000 is $90,000, and therefore the total amount of gifts that should be reported for the year is A, $90,000.